Hello, ladies and gentlemen. Welcome to the X-Force Global channel. We got a lot of things to talk about today. We're going to be talking about the overall macro perspective of how Bitcoin is playing out. We want to talk about what kind of data that we have presented with us and how that's going to be intertwining with the different scenarios on how we can see more upside or possibly a bear market continuation, which is still highly valid right now as we speak. Now, starting off with the first scenario, more or less, we're going to say that this move here, since it's already so far and a year back, we can say that this is now established as some kind of 1-2. Now, whether this originally was some kind of A, B, or possibly even a W, X, and this is some kind of corrective move that we're going for a bear market continuation, which I'll be talking about in a second, is that we don't know until that actually happens. And that is one of the drawbacks. And as an Elliottian, we have to narrow down all of the highest probability scenarios with what we have right now. And I'm going to be doing that as best as I can by being rational as possible and also keeping in mind the rules and guidelines intact. Now, the biggest thing for the macro is that we want to start applying the idea of alternations. Alternation meaning the guideline of alternation is when you have a motive or an impulse structure, a wave 1, 2, 3, 4, and then 5 as well. The wave relationships between wave 1 and 2 and 3 and 4 is what's considered an alternation, or the application of alternation. So how do we apply that? We have a possible 1-2 either being as a sideways or a sharp corrective structure, and a 3-4 is going to be assumed as some kind of vice versa reversal pattern, meaning it's going to be either a sharp or a sideways correction as well, opposite of what we're seeing for wave 1 and 2. So if we're seeing a wave 1, 2 as a sideways, we have to expect a wave 3 and 4 as some kind of sharp correction. So if we're going to be applying that idea of alternation, that is what helps us keep the overall intact, good look of a structure when we're talking about how Bitcoin is going to be either continuing its bear market or bull market continuation. It also helps us whether Bitcoin is going to be continuing in a sideways structure or a deeper correction. And that is the beauty of the alternation theory. But again, it's a guideline. It's more of building the narrative in observation more than anything else. It's not a hard, fast rule. So, but that's why we want to say alternation theory is more applicable to the macro side of things than it is for the micro time frames. So with that being said, our first scenario here is based on the idea that we have a 5-wave move into a wave 1 here. And again, going back to the idea of alternation, we had a sideways corrective structure here, some kind of combo or a flat structure, either as an A, B, C. And if we have this as a shallow structure where it hit the 382, I believe it was a 382 on spot structure. Yeah, it was a 382 that was constantly being retested, and that is what led us to this impulsive move. And if we have that as our first 1-2, we're going to be expecting the higher primary degree of a 3-4 to be sharp. And if we want to be including this, we also have to keep in mind how our internal structures are going to be obeying the idea of alternation in mind as well. So if we're expecting that this is a wave 1, 2, and this is a 3-4, that also helps for this internal structure to be a sharp and this to be a sideways structure. So we have the alternation kept intact, and that is one of the pros for this scenario. So if we're saying that originally, well, I originally like to have this as a 1-2 here, but that's going to be the second scenario. There is a drawdown to that. But if we're keeping the most rational way of keeping things intact and assuming that we have a rational idea that there is going to be some kind of major pullback around the 80 to 90K levels, then we want to assume that this is going to be the longest wave of an intermediate degree wave 1. And with that being said, this wave 3 is now not the shortest, or assumed not the shortest, but it's still shorter than wave 1. So what that means is that wave 5, if we're keeping that rationale in mind to be short, it has to be a forced fifth wave short. And that is what we're kind of expecting overall. I think more or less collectively, markets are still seeing that we're seeing a possible fifth wave that's going to be concluding here. Whether you're bullish or bearish, I think a lot of people are expecting some kind of pullback. Whether this pullback is happening now, but with the current data that we have, this looks like a sideways structure, as we have explained in the medium time frame analysis yesterday. So again, based on the idea of alternation, we want to label this as an intermediate degree wave 1 for this entire structure here. And we had a sharp wave 2 here and a sideways wave 2 here. Again, like I said, that 5-wave structure, we want to see the vice versa reversal pattern of a sideways or a sharp structure. So we have, again, that 3-4 as a sideways structure here as that flat structure. Now, what's next? We are going to expect some kind of, hopefully, violent move to the upside for wave 5. That is going to be completing the larger primary 3. And like I said, based on the idea of alternation, we're going to have a sideways 1-2, and we should be expecting a sharp 3-4 that pulls us back into at least the territory of wave 5. And that right there is going to be the conclusion of that primary 4. So essentially, if we're having a move up here, this should lead us into the summer, kind of a summer bull run that we're expecting. Then, nearing the end of the summer, we should expect a sharp wave pullback. It could be midsummer, really depends, but we're expecting some kind of violent 3-4 of a higher degree of this primary. And then once summer is coming to a conclusion, again, based on cyclical seasonal moves, we usually see a move to the upside when fall has come into play. We're going to see at least some kind of move into 2025 based on this concluding as a larger cycle 1 degree, and that'll be our blow off top. If that blow off top happens, that is where the next major bear market will happen, at least on the medium term. And that will help us, give us a little bit more opportunities to buy into a cycle wave 2. And this will be a very good looking structure that also resonates with the idea of some kind of alternation, while also keeping the idea of channeling perspective, and also the idea of having a very, very good looking impulsive structure. Now, no structure is going to look perfect, but we want to work with what we have and the continuation of building these theories on all these different guidelines on the macro perspective, because that is the only kind of bias that we can be building upon. Not just Fibonacci's. Fibonacci's are more based on the medium time frames, but again, the larger time frames is what is going to be keeping intact the overall look of the structure. So if we pull up the parallel channel, which is another channeling technique that is based on the LA wave theory, we can say that the top of wave 1 is going to be our first pinpoint, and then we have our second pinpoint for wave 2, and that is going to be, as you can see, this move up here, we've retested the median line very nicely, and we moved up above it. We originally thought, wave 2 could have been as such. It broke above the channel, and all you have to do is readjust the channel, and this is what we've expected as some kind of characteristic of a wave 3, and that is why the bullish scenarios are more prevalent in this market than it is for the bearish scenario. Now, we are coming back into the original territory of wave 1 and 2 of this channel, but again, all we have to do is adjust it so that we have a little bit more leeway room on possibly wave 3 coming up and retesting this top here for being the top of that parallel channel, and coming back down and retesting this. And we can talk about whether wave 4 of the primary degree is going to do undershoot or some kind of move of going past the previous wave 4 degree. It really doesn't matter, as long as we create this idea of having an intermediate 1, 2, 3, 4, 5 into a primary 3 completing. So for this scenario, we're going to say that this is going to be the expectation of a completion of a primary 3, sharp 4 again, and then going up for a final 5th. So it's just part of all the cyclical seasonal data that we've had in the past of past bear market and bull runs. It's also keeping the wavelengths in mind, where wave 3 is not the shortest, but has to be longer than wave 5, but wave 1 is extended. So that is the observation and narration that I currently have in mind. And I think this is possibly the most rational idea just based on not just the macro perspective of the parallel channeling technique, also Fibonacci in mind and alternation in mind, is that we also have a really good looking structure for a possible 5-wave move up for this cycle wave 1 to complete off and blow off. And we go off to another bear market, possibly in 2025 to 2026. Now, again, that's scenario number 1. Now, let's get into scenario number 2, which is working on the idea of expansion. Now, expansion, as these scenarios are more better looking in arguably, but you don't want to be assuming expansion ideas in terms of parabolic moves because they're dangerous. You don't know how far a bull market is going to be going, no matter how good they may look. But we do have pros for this idea as well. Now, the major pro for this idea is that it helps alleviate that maybe we're not working in a wave 3-4 and we don't have to worry about wavelengths in mind. What if we're creating another sideways structure just like we did over here, where intermediate wave 1 originally had this sharp structure? We now have an intermediate degree wave 1 here, completing as a 5-wave here, and this was the consolidation for sideways 2, just like we saw for here. And then we're creating another lower minor degree of a sideways structure here that is not only smaller in time, it's fitting very nicely as a sideways structure, just like we saw previously. This is what leads us to another breakout possibility into another extended 5-wave move into the extended third of the intermediate degree. So this, again, like I said, helps remove that previous notion that we had for that wave 3 or that rational idea of the wave 5 ending here and then pulling back. Instead, the bull market just continues without anything in mind. We're just creating the step-like formation pattern or that parabolic curve like we've seen in the past on historical Bitcoin runs. So if this is going to be happening, we're going to be expecting, like I said, that step-like continuation to the upside, wave 3 and 4, 3, 4, 3, 4, and then eventual blow off top. That will be the next blow off top. So if we're creating this large extension wave 3 in this here, the con to this is that 1-2, 1-2 nested structures are very difficult to call beforehand because they can essentially go on forever, right? If you have continuation of 1-2s, it's impossible, actually, nearly impossible to predict. However, if we have that idea and we kind of narrow down our past performance and how Bitcoin has performed in the past, these 1-2s are also just as valid. And maybe we need one more push up to continue validating this idea. And if that happens, I think that this idea could become the priority scenario if we were to see some kind of impulse of 1-2 and another wave 3 being in the making for this minor degree. So I like this idea, but it's just too early to call. So again, sticking with the rational idea of that scenario number 1 is what I like to see until we see more upward thrust into the price action. So for scenario number 3, similar idea, but instead of having that nested like 1-2, 1-2 formation, this alternation idea does take into the idea that maybe we're working with, just maybe, that we have similar lengths in wave 1 and 3. Now, if we're having a similar length in 1 and 3, we're going to be expecting a very, very extended intermediate degree wave 5. Now, this is very similar to the scenario number 2 in terms of the expansion idea. Instead, we just have a 1-2, 1-2. But for this, it is a hybrid scenario of that kind of problem that we had with the wavelengths of wave 1, 2, and 3, 4. So here we can say that 1, 2, 3, 4 is similar in length in terms of the extension. And we have this 5th wave extension going to be the overall completion in terms of the Fibonacci length, okay? So again, wave 1 and 3 is equal in length. And if that's going to be happening, we have to expect the 5th wave extension, and that is what's going to be completing the similar good-looking structure of a wave 3 extension, wave 4, and then wave 5, okay? Now, this is less probable in my opinion. Like I said, that's why we're managing expectations as best as we can. But I do think that this idea has its say. And if we are getting out of this zone and we do create that fifth wave, this is going to be overlapping with that second scenario, like I said here, as you can see, whether this is creating a wave 3 and 4, and that'll all be dependent on how shallow of the pullbacks we'll have within these regions here. And we can continue to work on this thesis as well. Now, scenario number 4, this is going to be having the bear salivating because it is a very valid scenario and it's at peak validation right now as we speak on whether we're going to be continuing the bear market or not. You can't say the scenario is not going to happen just due to the fact that after every single pullback we've had, there was a very, very strong indication of a continuation of a bear market. And that happens even more when price moves up. But right now, I do believe that we're at peak validation for this possible bearish scenario, that we're going to be going for another bear market run. Even if we do create another high, we still have that possible expanded B pocket zone between the 1236, or actually even the 101% to the 138%, that is going to be making it a valid B pocket zone, and we will have to expect another continuation for the bear market to happen, possibly going down even into the $10,000 levels. Now, it's too early to call again, but again, it is at peak validation, ladies and gentlemen. That's the key thing here, because this is probably the level that bears were looking for. We're at another all-time high. No matter how good the fundamentals may look, no matter what ETFs are telling us, no matter what people are doing, this is what technicals are directioning us into, which is we have a cycle 1, 2 still being in creation, meaning that this move down was a corrective structure. This move up was also a corrective structure. And now we're looking for the final impulsive move where everything was just canceled. And we're saying that we're going back into bear market territories, and that is going to be happening either now as a 1, 2, 3, 4, 5 going into wave 1 possibly, and then another 2. This will be where we're going to be validating the structure even more. If we do come back down into the 40K levels, that is when I would highly expect that we're going to be going for a bear market continuation. If not, we're going for one more high. Again, internal structures, like I said, we can even replace this as an A, B, C, and say that we're creating some kind of impulsive structure here that either completed as a 1, 2, 3, 4, 5, or a 1, 2, 3, 4, 5. So it's all internal hybrid structures. But again, keeping in mind that we want to be creating an overall 3-wave move. Now, this 3-wave move I like, it's okay. But what I don't like in terms of this scenario is that we have a very rare WXYXZ scenario here. We do have 3 waves being built up for each one. But again, I don't like the idea of having a WXYXZ. It's rare in itself, first of all, and it's very rare on the macro side of things. It's a first for any kind of market, especially for Bitcoin. Usually you would have some kind of large consolidation within a bear market or a large sell-off, sharp correction. We just didn't have that. And I think this is why this scenario is still considered the least probable, in my opinion. I still think that we're still in a level that we have to just work with what we have and say that we're going for another move to the upside, even if we come back down to retest this liquidity zone. I think that we are still looking for one more high. Even if this bearish scenario would happen, I still expect us to at least breach the all-time high for one more move to the upside for a B pocket zone. Even if it's just minuscule, we're going for some kind of 101% in between the 138% as well for a B pocket zone. And then we can continue talking about this narrative to the downside. So I think that is how I believe is going to be all of the scenarios. Again, in summary, if we're talking about the first scenario, which is the most rational idea, I like this idea because we have a labeled 1 as the extension. Internal degree wave 3 is also the shortest, or not the shortest, but it's shorter than wave 1. So that makes us believe that wave 5 is going to be a forced short wave 5 of the intermediate degree. And then we have a wave 4 that's going to be sharp. That'll also help this alternation in mind of this. still while retaining the overall look of this bull market run, and then we'll have a blow off top eventually. So this move here, eventually, this zone here is going to be going to continue back and forth before one last move to the upside for cycle wave 1, and then we come back down for a multi-month pullback, which will be the bear market for 2025 going into 2026. Scenario number 2 works on the overall expansion idea. Scenarios number 2 and 3. Again, it's just whether you like to see this as a 1-2-1-2, and it does help alleviate some of the idea of wavelengths, and I like that idea as well, and that also helps build that parabolic step-like formation and that parabolic curve theory. I like that idea, but we need to have shallow pullbacks, very, very shallow pullbacks of every single internal degree, but again, that's too early to call. So we can also work with other expansion idea if you don't like the idea where maybe wave 1 is equal in length to wave 3, and we're going to be expecting wave 5 similar targets, and we're going to be going for another pullback and going for that 5th wave primary degree. And again, finally, that bear market scenario where we're going down right now, we're at peak validation, or we're going for one more high, and that is where things again, another fake out would happen, and we'll go down for rest in peace, ladies and gentlemen, 10K. So those are the current scenarios that I see. Hopefully that was helpful, ladies and gentlemen. I will see you guys in the next video with the update to the medium and the shorter time frames. Thank you very, very much. See you guys in the next video. Bye-bye.